Are you using some sort of tool to, or is there a specific report you have built out to understand the variances? Or are you just allocating some extra time as you close out the books for them? You're looking at line item year over year percentage change. And the reason I'm asking, I was literally in a group meeting yesterday, a bunch of cast leaders were there. And one of the biggest struggles was like, well, how do I get my team to like think in an advisor fashion, give
Yeah.
them space to do that? So I'm really curious, whether it's a leader thinking about this for their team or it's a partner like yourself, like, are you allocating the time and that's how you're catching them, or do you have some sort of automated alert, or how are you thinking about this?
So we're not allocating time specifically, and we do not have any sort of like special software doing it. This is just, after we're done actually doing the work and you're looking at the P&L,
Yeah.
does this pass the reasonable person test? Take a deep breath and take off your accountant hat and put on your logical person hat and just take a look at it for 5 seconds and just see, like, this number is way higher than it was last year, or this number is zero. How has their rent been zero all year? Like, are they not paying rent anymore? Like, what's happening here?
Yeah.
And it's those really obvious ones that jump out, and that's when you pick up the phone and call the client. The client also, they're not shy about picking up the phone and calling us, because we do foster this environment of, call it like an open door policy. It's flat fee billing. We do not charge for phone calls or emails or things. We're not billing hourly. It's all flat fee. We tell our clients, if you have a question, please call us. You don't have to Google. You don't have to talk to your uncle or your neighbor who owns a business and get their take on it. You're paying a CPA. We will happily give you those answers. And it's in those 10, 15, 20-minute conversations sometimes that you can answer that one question that puts them on a completely different track. They're about to do something insane. They're about to take out, $100,000 out of their retirement account to buy a new piece of equipment that they really need. And then we'll say, well, instead of doing that and paying the tax on that distribution and paying the penalty on that distribution, why don't you get a business line of credit or a home equity line of credit or something like that? And they're like, oh yeah, I didn't think about that. And all of a sudden you just saved them $40,000 in tax in a 5-minute phone call.
Yeah.
So we're not billing out for CAS. We're not billing out for advisory services. So it's not a revenue stream for us, but it's certainly a referral stream, because clients really appreciate that. You're creating goodwill in those phone calls.